mortgage come up for renewal next year? If it does, you might want to listen to this. Got a lot of data here, so I'm going to power through. On November the 10th, 2023, the senior economist at CMHC says in 2024, we have up to 2.2 million mortgage borrowers that will be renewing. That represents 45% of all outstanding Canadian mortgages. A total of 3.4 million Canadians will have to renew before 2025 in total. Bank of Canada's analysts estimate some $331 billion in mortgages are going to be coming up for renewal in 2024 and $352 billion in mortgages in 2025. So currently, guys, inflation is standing at 3.1%. Remember those target rates they're trying to hit at? Interest rates are currently averaging around 6.05%. Conversely, let's talk about what interest rates were at in 2021. So inflation in 2021 was averaging at about 3.1%, kind of the same as where it is right now. And interest rates averaged out at about 2.12%, a slight discrepancy, wouldn't you say? So I'm just going to remind everybody here, remember when Tiff Macklem said interest rates would be low for a very long time? And that didn't quite pan out exactly as he indicated. And a lot of Canadians jumped into the housing market and basically are now positioned in a place that's very uncomfortable for them financially as all of their mortgages are coming up for renewal. So there is too much risk right now related to mortgage renewals in Canada, which could mean the Bank of Canada is done hiking rates ultimately. Some prominent strategists have actually been predicting that rate cuts are going to start happening midway through next year. Now, for all of those you following me along with all my videos and on my channels, you know that I've been saying this all along. So let me break this down for you. So the head of macro strategy at Desjardins, Royce Mendez, he basically just recently stated that in Canada, we have to expect that the next move is going to be a cut. The bank is done raising rates. Well, frickin' hallelujah. It's about time. So let's follow this up with, he continues, he sees that this is happening as soon as the second quarter of next year. He's anticipating a sharp reversal on the horizon in order to avoid a worst-case scenario for the economy, brought on by the looming threats tied to Canada's mortgage market, what I said earlier. We're not going back to zero, but I could see rates falling to about 2.5% in terms of the Bank of Canada's policy, Mendez added. The wave of mortgage renewals that is coming means the bank has to get the rates lower. So those are big numbers that are coming up for renewal, and our Canadian GDP relies heavily on the housing market. So for those of you that don't know, this past summer, Statistics Canada reported that the housing market contributed more to the gross domestic product, totaling approximately $267 billion and expanding nearly 3% from July 2022 to July 2023. As a share of the GDP, real estate makes up more than 20%, somewhere to the tune of 40% of all of Canada's GDP. That is crazy. So let's go back to Tiff Macklem, because he's our favorite. And his predictions are always so accurate. So he was testifying in Ottawa this week, and he cited mortgage renewals as one of the reasons the central banks held the lines at its most recent interest decision. RBC bank analyst Darko Mielik made his own headlines this week, noting in the report that with 60%, guys, of Canadian mortgages up for renewal in the next 3 years, homeowners are facing a payment shock, you think? Unless rates come down. Mendez, by comparison, believes the percentage of mortgages up for renewal in that period could be even higher than that. In 2020 and 2021, the housing market in Canada was booming, so there obviously were a lot of mortgages taken out. The real pain begins in 2025 and into 2026. So the Bank of Canada's fight against inflation is not done. And remember, as I've said before, how does Bank of Canada fight inflation? Well, they control our interest rates, because interest rates indicate how much we can spend or not spend. in conjunction with all of the other things that our fabulous leaders decide to do on a regular basis. Macklem has not indicated when he intends to cut sorry about that. He does not indicate when he intends to cut rates, which obviously they can't tell us that, because then that would, give us information that we could use to arm ourselves and be prepared going forward. I digress. The annual inflation rate edged lower to 3.8% in September, but that remained above the bank's 2% goal. Mendez dismisses the idea, though, that the bank will need to see inflation on that level to justify cut rates, which again, as I indicated earlier, we were at 3.1% inflation in 2021, and we were averaging out at a 2% interest rate. So come on, guys, let's get it together. If you want to see people spend money and put money back into the economy, then we need to be able to afford our homes, our mortgage payments, put gas in our car, pay for the bills, pay for food, all of which has gone atrociously expensive, especially under the Liberal leadership and their policies that they've implemented right now. So let me continue on, because Mendez does carry through and say he thinks that higher for longer is a signaling tool, adding that inflation tracking below 3% could be enough to justify cut rates. Well, we're almost there, so it's time. 2024, I said half mid second quarter, we were going to start seeing cut rates going into 2024. So we'll see if my prediction comes true on this going into the next year. Bank of Canada has currently set its benchmark rate at 5%, and Mendez sees that's dropping significantly over the next year, which I have said as well. I think they have to end probably 2024 at around 3.5% and then keep cutting into 2025. This is consistent with all of the information that I have been reading. Pay attention. So there you have it, folks. I do believe that based on all of the data that I have read, statistical graphs, Bank of Canada, Bloomberg, high-level economists, I do believe that we are going to go into 2024 and seeing rate cuts. So remember this, stay alive till 25, because that's when we're really going to start seeing the rate cuts, 2026 and 2027. We could go into a buying frenzy again, depending on where we are, because now they have upped the numbers. And currently we need 3.5 million to 4 million houses per year, which, as you know, with JT bringing in 1 million immigrants, we need more housing. Plus the regular Canadians that are already here, we don't have enough to service. So what do I mean by this? By trying to get through 2024. So if your renewal is up for 2024 and 2025, do a 1-year fixed, do a 1-year variable, talk to your lending professionals, whatever you can do to strategize to pay your mortgage to go into the years where the rates are going to start significantly dropping. I'll remind you again, if you look back to 2021 when inflation was at 3.1%, rates were averaging out at 2.12 to 2.5. We're there right now. So we need to get our rates down. If you can't make it until then, talk to a real estate professional, give Frank or I a call. We can give you a valuation if you're in the Hamilton, Niagara, Burlington, KW area. We can help you find out what your property is worth. We have great contacts for mortgage professionals. Perhaps they could give you short-term loans if you have equity in your home, if you want to stay in your home, to get through until the rates significantly start to drop and you can lock that baby in. Because we live in Canada. We need housing. I can assure you rentals are not going down in price unless the government puts their foot in and says and forces landlords. That's a whole other conversation, and I'll do another post on that. So I hope this helps. I hope that if you're renewing in the next 1 to 2 years, please feel free to reach out. We have great people at our beck and call. Stay informed. Peace out. Love y'all. Ciao for now.